bookkeeping, both cash and credit transactions. Many students get very confused, debit, credit. And if you remember one of my videos I made for you to understand debit, credit, pearls, yeah, that gonna help you remembering your debit items and credit items. If you watch one of my other videos, PEARLS, pearls, RLSS at the bottom, you will see in a minute. If you're halfway through, PEA are your debit item, purchase, expenses and assets are for revenue, income, liabilities. S and S is just below. There we go. Yep, S. These are your credit items. Just watch my other video. It will be very helpful for you. Now, every transaction has two effects, one debit, one credit. And what are the transactions? Any events that you can measure in terms of money are known as transactions. So every transaction has got one debit item and one credit. Now, if you're thinking these are of debit card, credit card, or credit sales, just delete it from your mind and brain. There's nothing to do with this debit card or credit card. This debit and credit are absolutely accounting terms and terminology. Okay, let's move on. I believe you are aware of pearls or debt click or anything else like to remember your debit items and credit items. We will start with a transaction and put the double entry concept in a T account, something called T account. This is a transaction. Iman Al Saudi is the owner of a shop. She purchased goods paying by check. Now we told you every transaction has got one debit and one credit. What is debit and what is credit then? If you remember your pearls, you can very easily identify purchased goods. So purchase account going to be your debit. Purchase is always debit. And paying by check, your bank money going down. So bank is a current asset. If it goes down, that is credit. So bank credit. How do we put this debit and credit items into T accounts? Those are known as ledger accounts. Let me show you. You need to do two T accounts. One, I'll do the other one over here. Two. As you already know, one purchase account. Another one is bank account. Now, left hand side is DR, debit, right hand side is CR, credit. There are three columns: date, detail, money. I'm doing from London or UK, that's why I'm using pound signs. You can use dollar sign or any other currency. Date, detail, money. That is your typical T account. Why does it call T account? It looks like alphabet T in English. That's why it's a T account. Bank account. So there's bank account on your left hand side DR, right hand side CR, date, detail, money. These are three column. You can think like this, three column. Yeah. And again, date, detail, money. Three column. Now we already identified two items of one debit and one credit. We said every transaction has got two aspects, dual effect, one debit, one credit with the same amount of money. So purchase account should be debit. This is your purchase account and this should be debit. So go to the debit side and write the money first, 250. That's how you identify it's a debit. And the date, let's assume it's the 1st of today is this month is September, 1st of September. That's how you identified purchase account is debit. Purchase account is debit. Now your bank account is credit. So on the bank account, you need to go to the credit side, writing 250 and the date 1st of 9. That's your debit credit kind of done. You just need to do the detail. What do you write into the detail column? The rule says you need to write the opposite account's name. That means in the purchase, you're going to write bank. And in the bank, you're going to write purchase. And that's done. Your debit credit for this transaction 1 done. We have quite a few transactions in this particular video, and we will be doing with those things. Go to the next one. Transaction number 2 will be very quick. The owner bought computer by bank transfer. Now, bought computer. Computer is not a goods, it's an assets, and assets are debit. Assets are debit. So computer debit. And bank, again, bank going down. Bank is a current asset. Another asset going down, it's credit. You're going to open a computer account, and you're going to open a bank account. Now, we can still use the old bank account. You don't need to open a repeated account. So you can still use this bank account, but just for your learning purpose, for very beginning, I'm going to use new T accounts. Okay, so bought computer. As I told you, you need to open a computer account. Computer AC account. Left hand side DR, right hand side CR. Date, let's assume this is the 2nd of September taking place. Computer debit, we said. How much money? 700. And your bank account, you're losing money in the bank. So bank is a current asset. It's a debit account generally. If it is up here, it's down on the credit side. This time it's a down. That's why 700 on the credit side. 2nd of September. And you write the opposite account's name into the detail. In computer, you write bank. In bank account, you write computer. That's how you do. Yet again, every transaction, 2 effects. 1 debit, 1 credit. So, computer itself is a debit account. And computer coming in into the debit. Bank also debit account current asset, but this time bank going down. So, if you watch my other video pearls, that will help you what is up and down. Moving on to further of the transactions. Number 3. Jose sold goods, this time selling goods. Jose is the owner. And check received. Sold goods is a sales account, and sales are always credit. And check received, this time check bank. Bank going up, bank debit. So you need to open a bank account and a sales account. And help me, how do you do it? You already know, left hand side DR, right hand side CR, bank account, sales account, left hand side DR debit, right hand side CR credit. We know this: date, detail, money, date, detail, money, and likewise. You already know it. So you said bank debit. Go to the bank account. On the debit side, put the money. How much? It's 125. Bank debit. And sales credit. You need to go to the credit side, 125. Let's put the date is 3rd of September. 3rd of September. And we know the rule is the opposite account's name. We've got to write into the T account. Here we're going to write bank. Here we're going to write sales. That's boom, done. Moving to the other one. Okay, it says rent paid by KBM Group, Barking office. Barking is in East London. 900 by standing order. A standing order is a bank payment. So rent isn't an expense. Yeah, expenses are debit. So rent, debit, and your bank going down. So bank credit, as you already know by now. These are just more practice we're doing. You got to open a rent account. You got to open a bank account. Rent and bank. We know left hand side DRCR, DRCR. So rent debit 900. Let's assume it's 4th of September, and bank going down credit 900. 4th of September. Your job is done. You just need to write the opposite account's name inside here, bank, and inside there, rent. And your 4th one is done. I think 4 more we got to do, just a bit practice to give you a hint how does it work. This time it's an income, commission received. If you remember incomes are credit. Commission received is credit account, and cash is a current asset, it's a debit account. cash debit. So open a cash account. You're receiving a commission. You can either write a commission first, no problem. Commission received, you said it's a credit. On the credit side, you write 50, and cash, not bank, yeah, bear in mind. Cash debit 50. Let's assume it happened 5th of September. Inside the detail, you would again write opposite account name, cash, and CR. Commission received. Isn't it so easy? Yeah, that's how easy it is. Just for your practice purpose, I'm going to show you a couple of more new. This time it's a credit transaction. Yeah, we have few more transactions. So far we have seen bank and cash transaction, but this time Mr. Khan is the owner of a business, has sold goods £50 worth of credit. This credit means not getting paid now to trade receivables. If you're selling goods on credit to your payables, receivables, sorry, yeah, they will pay you later. But how do you do double entry? This transaction has got one debit, one credit. How do you identify? Sold goods, there is no doubt sold goods means sales account. Sales always credit. Receivables, you need to open the trade receivables account, and receivables are current asset. That's why it's a debit account. So open a sales account and open a trade receivables account. DRCR. Well, what do you start with? Let's start with sales. Yeah, sales credit. Go to the credit side of the account, 50, and this took place 6th of 9 2018, and receivables are debit. We said so 50 debit, 6th of 9. Inside the details, you write opposite account's name, sales and trade receivable. Boom, your job is done. But the question is, the very next one, what if the name of the trade receivable is given? Mr. Khan sold goods 75 on credit to Mr. Samuel. So you follow the same rule. Sales is yet again credit. There is no doubt, blind eyes, your sales are credit into the account. So on the account, you go to write 75, and let's assume 7th of 9 it took place. But yes, there is no doubt Mr. Samuel is receivables for Mr. Khan, but instead of writing trade receivables, you got to write Samuel's account, or Samuel account. Yeah, because if names are given, you got to write the names. That's the rule. And Samuel is debit for Mr. Khan. You're doing T accounts on behalf of Mr. Khan. Bear in mind. And you write the opposite account's name. Life would be easy if you follow like this. And the 8, and I will stop just right after the 8th one, doing the double entry. Office equipment bought 300 on credit from Garcia Limited. Office equipment is an asset, and assets are debit. And you're buying items on credit. You're not paying now. You're buying from Garcia, so it's a liability. Your trade payable. Garcia is your trade payable. So Garcia Ltd is your credit account. You need to open 2 T accounts yet again. Office equipment account and Garcia Limited. Office equipment is an asset, that's why it's debit. Debit by 300. So on the debit side, you're writing 300. Let's assume it took place 8th of 9 2018. You can write, no problem with that. And office equipment debit, Garcia, the trade payables, you can highlight it as trade payables or credit. It's a liability, that's why it's a credit item. And on the credit side, 300. One more 0. Yeah, that's how you write. And in the detail, you write office equipment, and over here Garcia Limited. Okay folks, hope it helps to remember and to do your double entry bookkeeping. Thanks for watching.